Shares of Lithium Americas dropping nearly 15% in the last 2 days. The moves as Senator Manchin pushed back on the administration's ambitious EV plan. The stock, though, has more than doubled over the past year. Let's bring back Lithium Americas CEO Jonathan Evans. John, great to have you back. Welcome.
Thanks. Thank you.
I want to ask you about lithium overall. The prices that we've seen with so many metals just skyrocketing across the board, particularly after the Ukraine invasion. And so I'm wondering, with the administration's move to invoke DPA, Defense Production Act, when you heard that happen, did you think my timeline for producing lithium in America has actually moved up? Has it changed anything in terms of your timeline?
For our particular company, we're still on path, really the same, the plans we had before was to get into production as soon as possible, at least construction in the United States, which we're targeting the second half of this year. I think DPA really kind of crystallizes the government's concerns around lithium and a host of other critical minerals, making it a national and economic security issue. That, in addition to the administration's moves with the Loan Program Office, in addition to about $7 billion of supply chain grants, it really has come together as a very comprehensive strategy. Really, if you look at it compared to other countries in the world, it's more comprehensive than what we've seen in recent history around an issue like this, which is really taken to fore with the invasion of the Ukraine now and the supply chain and deglobalization, which is going on right now, given the shortages.
I'm wondering how you view the administration's focus now on this issue. Is it a positive in that, perhaps there will even be a strategic reserve of important metals like this for the United States? Or could it potentially be a negative in that the United States might take a more active role in where you export the metal if you were going to export it, for instance?
I think it's a positive move. There's still a lot of details on DPA that we need to understand. There is potentially additional funding that could come with this, but it's more a signal than anything else. I think at this point where the government would like the private sector to step up and move quicker, given the growth that we've seen in electric vehicles and electric vehicle adoption and the national economic security issues that I think are a big worry, not only for the administration, but for Americans in general, given the challenges that we're seeing.
Jonathan, it's Tim. Can you just give us some of your framework on where you see lithium prices, carbonate hydroxide, as we get out in the next 1 or 2 years? And maybe just really quickly, though, how about inflation on you and your CapEx? I mean, it's probably gotten a lot more expensive to do what you do.
Yeah, so 2 parts on that. The pricing obviously has come up quite a bit, and there's a big focus around spot pricing. That's moderated a little bit. I think if you want to get a view on pricing, start looking at some of the public company filings in this space where you're seeing pricing now in the $20,000 to $35,000 range, which is significantly increased over the last 2 years, that's for sure, but very helpful. And that helps to address the problem that we just talked about getting capital deployed to start building these facilities for the supply chains that are already well ahead of us, in some cases with investments that have been committed by OEMs. I think the second piece, yes, I mean, that plays into it as well, where CapEx inflation across the board, not only projects that are underway, but also ones that are being contemplated, are going to be more expensive for as long as we think this inflationary environment's going to continue, which I think at this point, there's no end in sight, at least in the short term, and it is going to push up development costs. Pricing is going to help support that, though, now where there should be a lot of people that are very interested now in getting involved in this industry, just given it's sold out at this point and will be for the next several years.
So, Jonathan, when I look at your stock, I look at a stock that was at $42 or somewhere thereabouts back in November, traded down to $24 or thereabouts, and now it's back up again. So Melissa touched on this a little bit. What is the biggest contributory factor? Is it politics right now? What are we looking at for the retail investor or the institutional investor that's buying your stock tomorrow and doesn't have the stomach for that move? What should they look at as the tell on your name?
For us, I think it's real focus on execution this year. So we have 2 main focuses right now in Argentina to get that project completed and in construction by the end of the year. And there's a lot of excitement around the Thacker Pass asset, just given the movement that we've made there and our plans to get that started later in the year. Those will be catalysts, along with some of the collaboration we're doing with like the Department of Energy on the Loan Program Office and some of the other grants that are out there. I think those are all going to be catalysts, and that we're the largest and most advanced project, at least in the United States at this point. and it's one of the largest deposits in the world. I think our stock has done well in comparison to other lithium companies that are either in production or the EV stocks in general. I think we're up about 6 or 7% year to date. Given I use kind of Tesla as a proxy, they're down, I believe, year to date. And I think that shows that at least our shareholders and the market in general, with a big belief in what we're doing and the potential for growth in the future, given what we have in terms of an asset base.
In terms of the Thacker Pass spin-off or separation from Lithium Americas, Jonathan, is that on track? Should investors be looking for that? And what does that give you? Does that give you more capital specifically for Thacker Pass in Nevada?
So that's something we're still exploring at this stage. We've intimated that we've started those discussions to see what that would look like. When you look at our asset base, when you look at Argentina or Latin America versus the United States, the routes to financing and the market dynamics and challenges are much different in Latin America versus the U.S. This potentially allows a way to unlock more shareholder value by having more management focus in each one of the regions that is very, very specific to the challenges that those have. Versus potentially having capital allocation misalignment at the top level with potential strategic partners that we're talking to in the U.S. There's a huge move now in North America by OEMs and other folks in the supply chain for direct interaction with lithium suppliers and/or I would say supply chain in general to make sure that there's going to be stable supply. And I think there's a large part of the investment community which really likes that approach versus perhaps maybe a more global one, which has more risk in other markets, which have just different fundamentals.
Right. Jonathan, great to see you. Thank you. Hope you'll come back. Jonathan Evans of Lithium Americas. Jeff Mills, there aren't too many pure play ways. I mean, one of the other, publicly traded stocks, for instance, is Albemarle, but that's a small part of its business. So would you go with an LAC type of stock, which has not, by the way, produced an ounce of lithium from its mines yet?
So I think they do have a geographic advantage, for example, against ALB, no Chile exposure, no China exposure. So I like it. They have a massive amount of revenues tied to potential production. It's just a matter of whether they can get that production out of the ground. But for an investor, just know this stock could easily fall 25% to that October breakout level. So just beware, size it appropriately.